Why revenue is often a vanity metric if you don't have the right systems in place. So, where do you come in and where do you typically see the biggest profit leaks in a growing law firm?
And I'm like, oh, but profit leaks, why that's a good way to say this is think of a leaky faucet. You have a sink and you turned it off, at least you think you did, but it could fill the entire sink overnight. Okay. Yeah, I frequently will tell people break up with your P&L because I know that's the go-to
I love
statement
that.
and I'm an offender.
Welcome back to the Search Bar, the podcast for law firm leaders who want smarter growth without the guesswork. Wine optional. I am Eric Ritter, the SEO Sommelier and founder of Digital Neighbor. With more than 12 years of experience helping law firms scale, I'm here to have insightful conversations with industry subject matter experts so you can learn from them. And if you're ready to dominate in today's AI-driven search environment, check out my Motion for Marketing Success System. It starts with a free discovery session, no fluff, just a clear path forward. The link is in the show notes. Today, I'm really excited for this episode because we're looking at a paradox that keeps many firm owners up at night, having a calendar full of leads, but a bank account that doesn't seem to grow. We're pulling back the curtain on profit leaks and why revenue is often a vanity metric if you don't have the right systems in place. To help us navigate the numbers, I am joined by the wonderful Kelley Brubaker. Kelley is a CPA and founder of Profit Scale Thrive. She acts as a fractional CFO for law firms, helping them move past bookkeeping to achieve true financial clarity and sustainable scaling. Kelley, welcome to the Search Bar.
Thanks, Eric. I know we're going to have so much fun today.
Awesome. Well, as the SEO sommelier, I always look for a wine that matches the expertise of our guest. Since we're talking about transparency, structure, and finding the hidden value in a firm, I've chosen a crisp Chablis because I think it's perfect. It's lean, it's precise, and it has really that steely acidity that cuts through the fat, right? Because you want a wine with some good acidity, with something fatty, like a good steak or something like that. Just like a good CFO cuts through the overhead and finds the actual profit. So that's the recommendation for today. So if you're drinking along at home, pause the episode, run out, get some crisp Chablis, and then join us back here. If you don't have that opportunity, just hang on tight and get it afterwards because I'm really excited to get into it here. Starting off with the revenue trap here with Kelley, because here as a marketer, I see this all the time. I see firms pouring money into SEO, into PPC, thinking, hey, we're getting all more cases and that's going to solve all my financial stress. But Kelley, as you often say, revenue does not equal profit. So I'm curious that what your thoughts are that many law firms invest in marketing and lead generation, but still feel like the money just disappears. So where do you come in and where do you typically see the biggest profit leaks in a growing law firm?
No, absolutely, Eric. I see this so often. And let's first talk about profit leak. So, because I talk about profit leaks often, and it actually started off, it was a conversation I was having and it was kind of off the cuff. And I'm like, oh, but profit leaks, why that's a good way to say this is think of a leaky faucet. You have a sink and you turned it off, at least you think you did, but drip, drip, drip. And if you plug that sink overnight, the water could fill each of those little drips, seem inconsequential, each little drip, but it could fill the entire sink overnight. Okay.
It adds up. Yeah.
It does. And so
Yeah.
that's where I'm like, wait a minute, I think I'm onto something here. This is a good visual. Profit leaks are the little things. It's not one big thing. It's not, I blew, 50 grand on Google ads and got 0 clients. That's an obvious, let's fix that. These
Yep.
are the
Yep.
little things. And it's the things like, if you're hourly billing and you're not capturing all your time, that's a silent leak that you're missing out on revenue, because if you're not capturing all your time and you bill time, then you have a false output. Like you're working more and you're not getting paid because you're not capturing your time. So the leaks are these little things. And sometimes I feel like I get stressed out a little bit because I'm like, that's not big enough of a thing that I've identified. But it's the addition. It's all of these things adding up together. And there's a ton of them. I mean, I wrote a book on 10 of them. I could have gone on for probably 50, but it's the little things. And so,
Yeah.
we want to be able to focus on what are those little things that are adding up. It's that they're so minute and they're out of your head. Like they're not noise. They're not in your face. And that's why if I'm like, hey, if I can just capture all the things that are not noise and let's get those fixed, we can put more money into your bank account. That's what I want to do.
I love that. And, obviously, your stuff, it sounds like, right? You've written a book on it. You've identified a lot of these leaks, and, it seems like you're good at kind of thinking outside of the box, right? And kind of beyond where people would traditionally look. Because I know a place a lot of people look is the P&L statement, right? I do it every month, every week, maybe, right? Just to understand kind of how the business is going. And, I feel like that could maybe be misleading for some law firm owners, if they're trying to make decisions there. What are your thoughts on that?
Yeah, I frequently will tell people break up with your P&L because I know that's the go-to
I love
statement,
that.
and I'm an offender. Anything
Yeah.
I talk about, literally anything I talk about, I have done in my own firm. I've had my firm 20 years. I did all the things, and I was in public accounting, which is equivalent to big law, and spent almost a decade there. Left was CFO of a bank, and it was a publicly traded bank. So like I know my stuff, but I thought, oh, I got this. I can be my own firm owner. I had no clue. But the problem with your P&L is that it doesn't capture everything that's going on in your firm. And so it's missing the things. The big, big, big things that it doesn't report are your owner draws. So whether you're an LLC, a partnership, or an S corp, any of your partner draws, those are all equity which are posted on your balance sheet. They're not reflected on your P&L. So when you look at your P&L and L and you get to the bottom line, you're like, oh, net profit. I made 100 grand this year. I'm so excited. And then you go over to your bank account, you log in, and you're like, there's only 5 grand in my bank account. Where did my P&L says I made $100,000. Why is it only 5? And that's where I try to introduce, well, there's a third statement, and it brings your balance sheet and your income statement together, and it's your statement of cash flow. And so that's trying to show you what's not on. It's the combination of everything happening in your firm, what's on the balance sheet and your P&L. It's not bad to focus on your P&L, but I feel like firm owners need to take a step back and look at more than what's available on their P&L. And that's where I try to come in and say, okay, if you focus on that, that's great. But I also want you to look at these 5 other things. And I don't ever want to get beyond that. My most with metrics is 10. 10. That's it. Don't go beyond it, because and it's always different for every firm because it depends on what your goals are. But if you try to measure 10 things, now it's a distraction. It's too many. It's too many different directions. So try to keep it under 10, but there's things that you can look at in addition to your P&L to make sure you're on the right path.
Makes a lot of sense, and kind of like what you just mentioned probably hits home for a lot of people, right? Like you feel like you're making all this money, but there's nothing left in the bank at the end of the day. I've heard you define this as the revenue trap, or part of it, the revenue trap. And it sounds like that's exactly what you're describing there, that maybe a law firm's fallen into that.
Oh, absolutely. I mean, I can tell you, I could pull 10 different sets of financials where the top line revenue is exactly the same within, give or take, 50,000 or something. So say they're all at 3 million in revenue for a year, and each of them will have a different net profit, and each of them will have different cash in the bank. And it's all because they're making different decisions. But it's whether they're making the right decisions for their firm. I get frustrated a little bit. I somewhat get excited. I see, the industry reports come out and I'm like, oh, good. Another industry report came out. We can start comparing. It's human nature. I tell my kids this all the time. It's just human nature to compare. You just always compare. Are you doing better or worse than the next guy? Right. And that's good for incentive, but it can be very bad because what you don't know is you see this industry report and it says firms that have $1 million in revenue, the average net income was 50 grand. And you might have only made 5 grand and now you're all upset. You're like, oh my gosh, this is so horrible. I brought in $1 million of revenue. I only walked away with 5 grand. But what that industry report doesn't tell you is most firms were not hiring. You were expanding your team all year. That's why your net income is 5, because you invested in people to have the right people who are trained, that now as you introduce new, maybe you have new marketing initiatives. And so now you have more revenue coming in. You added 2 people to your intake team. So that reflects on your P&L in real time. You had to pay the wages for the people while you hired them, onboarded them, trained them. And it takes a while for revenue to catch up. So I get a little frustrated with the comparisons because you don't know everything that was happening in all the other firms who answered that question the way they did. And the other firms may not have the same incentives or the same goals that you want. I have firms that'll come to me and say, I've been stuck at 750,000. I want to hit 1 million. And I'm like, that's great. But that's kind of this black hole. It's a desert where you've got
Yes.
to invest in a ton of people and maybe systems, and which means, tools. You're going to be paying out money. Your net profit, your take home, your draw out of this firm is going to be less until you get over 1 million. And I've seen it over and over and over again. It just happens because you have to have so many people to support the revenue. So yeah, it's hard to compare against other firms, but yet I like more the numbers that are maybe percentage based. So, if somebody has a realization rate of 90%, that to me is a little bit, I'd rather compare percentages because now it's, are you, percentages are better than dollars, I guess would be a better way to say that.
Yeah, and I like what you said there about, each individual situation is a little different or unique, right? Like you could be in the growth mindset, where, you're spending a lot of money on infrastructure or marketing. So of course, you're going to have less in the bottom line because you're making these investments, so I think that just makes a lot of sense, to not compare yourself to others, like you said. We all do that, whether myself at the grocery checkout, right? I always look over at the other aisle and I feel like I chose the wrong one, right? You're always thinking
Right.
you're behind, than someone else, but that there could be something else totally going on, right? With the other person in the other grocery line or the other firm,
Right.
right? So
Right.
really looking into your unique situation and which, knobs and levers you should be taking advantage of at that time. I think that just makes a lot of sense. Um, let's talk about, you as a fractional CFO, right? That's an interesting thing to me because my understanding is, a CFO is, like you said, moving away, or we said earlier, from just accounting and finance, right? Kind of looking from a lot of times, bookkeeper accounts like, hey, here's what happened last month, or here's what happened previously, to actually, looking ahead, maybe, what do we do next quarter there? So that can be difficult for a law firm or for a lawyer, right? Because,
Absolutely.
you don't learn that kind of stuff coming out of law firm, so just curious, if you can kind of walk us through that shift a little bit, and how you help people with that.
Yeah, I mean, and I like how you started that. So bookkeepers, accountants, tax people, they're all looking behind. And that
Mhm.
truly is the difference. So in my world we call it compliance. So you have to have bookkeeping that way, and bookkeeping is simply the financial history of every transaction that happened in your firm. Okay? So a bookkeeper is a record keeper. They're a historian. Okay. They're helping you track what actually happened. They hand those numbers off to your tax person. Again, that's another compliance. So you're doing the bookkeeping to get your tax returns prepared. And your tax return is just a report of what happened last year so that the government, you can compute how much tax you owe based on what happened. So again, looking backwards. Now you have this switch where I come in and I will frequently tell people, view me as a GPS. So you get in the car, you're excited, your spouse is in the car, kids are in the back seat, and you're going to Disney World. So you get in, you put in your phone, toot, 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 Disney World Orlando, you type it, you hit go, and then, whether you use, Apple Maps or Google or Wave or whatever, your Waze or whatever, computes, beep, 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 this is your best route. And then you're like, great, pull out of the driveway, you hit the highway, you start going. But an hour down the road, oh, I need a potty break. Oh, now you're like, oh no, I got a detour. We have to take a side trip. So now you're okay. So now you're looking on the map, where's the next rest stop, right? Or the next gas station. And then you get back onto the highway and it recalculates. And now the map is telling you, whoa, there was an accident 20 miles ahead. You need to get off on this next exit so that you can divert. And now, granted, you may have to divert 20 miles out of your way. You're in the middle of nowhere and you have to divert to get around this accident. But the map is telling you there's a roadblock and I'm going to get you around it. And then we're going to get you back on the right path. We're not, detours are not permanent. It's to get you around whatever the issue was. And so that's where I come in. I'm looking ahead. I'm constantly looking ahead to see what's coming up. And if there's something I'm like, oh, this may be an issue I can't predict. I'm not a fortune teller as much as I would love to be, but I can't predict the future. But I have history, I have experience, and I can tell you based on what I know, I can tell you what I think is going to happen. And so here's what I think we need to do to get around this roadblock that's coming up. And so that's where I come in. It's the future. CFO. It's becoming this buzzword in the small business world. Like for years, everybody thought, no, small businesses do not need CFOs. But the reality is we do. Okay. CFO is just chief financial officer. It just means the one person in charge of the finances, the money of the business. Okay. And it's that person who's not only looking to making sure the numbers are right, but looking ahead to figure out, are you even on the right path? Because what if you typed in Disneyland in California by mistake? Uh-oh. like that. And I'm like, whoa, wait a minute. We typed in the wrong destination. And so sometimes it's clarifying. Maybe you did mean California, not Orlando. So sometimes my role is just to clarify and make sure that you're on the right path. And the right path, there's no right path for everybody. There's your right path. And so I'm trying to help you find your right path. And then how do we get to where you want to go?
I love that. And I have a question here with the GPS, right?
Mm-hmm.
So, and in the car full of the family. So, how does a GPS deal with the whiny kids on the back seat that keep asking, are we there yet? Are we there
Invalid
yet?
question, cannot compute.
So what happens? So essentially what I'm asking, what happens if we get impatient, right?
Yeah.
And we want it to go quicker, and we're like, are we there yet? Why is it taking so long, Kelley?
Yeah, I know. And that's a great question. I told you before we started recording, I like to laugh a lot. So I do like to joke, but no, I get it. Trust me. My kids are teenagers and trust me. Why are we not there yet? They ask the same question 50 different ways and I'm still, no, and that's where, then it's looking and saying, okay, let's, time out. Great question. I get, cause I'm impatient as well. When I want something, I want it now. I don't want to wait 5 years. I get it. But it's then pausing enough to say, okay, well, here's why it's taking so long. Sometimes I've had some clients who they are their own worst enemy. And I know for me, I am my own worst enemy in my firm. I come up to I don't think I can do it. And that's never a good answer. But when I do have a client pushing back, like this, why aren't we there yet? And it's okay, well, wait a minute. It's because, and then let's look back, and it depends on the situation, but sometimes it's going back. Now, okay, I'm a financial person, which means I essentially can touch everything in a firm. but I'm not the marketing expert. I'm not the operations expert. Okay. I'm not the technology person. I have knowledge of all of these things. I have a working knowledge, a good foundation. But let's start back at the beginning. So say you want to double revenue, but you're only on track to increase by 50% this year. And I'll say, okay, well, wait a minute, let's look. And it's either there's only a handful of things it could be. Let's first figure out on intake. Is marketing working? Is intake working? How is that functioning? Because sometimes the answer is, well, hey, you had this amazing campaign you kicked off, and your phones are ringing off the hook, but 5 o'clock, the phone's shut down and everything goes to voicemail. Let's figure out how to fix that problem.
Yeah.
But then sometimes that's all, like, marketing's going well, you have good responses, good, click-through rates, you have good, your CAC is good, like all those things are firing. Intake, nailing it, hitting home runs, closing, higher than normal, everything's going well. And then I'm like, okay, well, now my next thing is going to be production. Are we actually getting the work done? And
Mhm.
sometimes
Yep.
it's the cause of the nature of the case, depending on what your practice area is. So what if you're in PI? Those cases could take 2 years to close. So you may be doing everything between your marketing and intake, getting new clients on board. But if that's a new thing in your firm that those are firing how they're supposed to be working, you're going to have a lag between now when you can start settling these cases, and that's when the money's going to come in. So it could be that, or it could be that you're not billing correctly, or you're not billing fast enough, or you're billing it, you're not collecting. So I'm looking at all the pieces from beginning to end of a client life cycle to figure out where the problem is. And then I can show you, here's the data, here's why you're not getting there. And so if it's a billing problem, and then I'll come back and say, if it's a billing problem, here's what's been happening. Maybe you're billing every 6 weeks. I think you need to bill every 2 weeks. If you can bill faster, it's the same amount of money, but I would rather have 100,000 in the door today than to have to let it trickle in over 6 weeks. Okay. So,
Yeah.
it's going back to the data. Why aren't we here yet? Well, let's go back and figure out where are we broken, and then fix whatever that is. And I'll give you a couple of different solutions of how to fix that. And usually just knowing. The hardest part's the not
Yeah.
knowing,
I love that, and looking at the
right?
metrics, I think, is so important, and you mentioned earlier, no more than 10 metrics, but I wanna challenge you here, right? So I was reading some of your publications, and you mentioned those North Star metrics a lot. If you could just whittle those down to, like, maybe the top 3 numbers an owner should look at every Monday morning, what would those be?
So that gets so hard. And part of why, now this is why this is so hard. It's
Yeah,
because I don't know what your goals are, but
okay,
I'm definitely
fair.
going to look at cash on hand. I want to see, how is my cash, so every Monday, look at cash on hand over time. So I guess I will take a step back. Before we look at any numbers, looking at a number isn't helping you at all. I don't care if somebody calls me and
Mm,
says,
okay.
hey, my realization rate is 97%. Is that good? I'm like, It probably is, but can we get closer? Can we get 99%? I don't know. There could be something wrong there. But then I would say, is your realization rate high because you're not billing everything? How much is your WIP? If you have all this work in process you haven't billed yet, then that might be because by the time you bill it, clients have been begging you, I know I owe you, just send me the bill and I'll pay it. So one number is not going to work, and one number by itself, without history to it. So definitely, look at cash on hand. Let's see, is that trending up or trending down? And that's more for awareness of making decisions. So I know a lot of people, and I'm guilty of this. Like, ooh, 10 grand just came in. What can I buy? I've been wanting to buy, whatever tool
Right, 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 there you go.
and like spend the money. So, I hope that doesn't always happen, but definitely cash on hand. Is your cash going up or is it going down? So look at that. I would want to look at, there's this thing called lockup. And this is something, I did not create this. It's something that, and I don't remember where I read it, but after I read it, I did one of these weird looks, like, lockup. What the heck is that? And then once I understood it, I'm like, oh my gosh, this is so amazing. So lockup, it's how many days cash is locked up in your firm. So you do work, and now cash is locked up in WIP because you had a time ticket, okay? You did some work, it's billable, you haven't billed it yet. You worked it, you just haven't billed it yet. So now you have time building up in WIP. Then you go and bill it. How long does it take for clients to pay you? So your lockup is
Yeah.
how many, from the day you do a billable task, how long does it take to get that money in the door? And I explain it simply. It's kind of a simplistic term, but it's, again, if my firm's lockup is 60 days, I don't know if that's good or bad. I don't really want to compare myself to other firms, but I want to do better today than I did yesterday. So if my total lockup today is 60 days, meaning it takes me 60 days from the day I do a task until I bill it and collect it, I want to make sure that when I look at this task next week or this metric next week, I want to make sure that I'm now at 59 days or 58 days. I want to keep decreasing this as
Yeah.
low as I can
Improvement
get
over
it.
time.
So it's all about the improvement
Yeah.
over time. But that's a huge
Yeah.
one because I have a lot
Okay.
of firms.
Yeah.
It makes a huge difference. Again, you could bill. So even if you're $100,000 in revenue or 2 million in revenue, it still means more to you to have that money in the firm today than to wait 30, 60, 90 days to get it. And I don't care what industry you're in, the longer it takes to collect on an invoice, the harder it's going to be to collect. So that's where it
That's
matters.
true.
And
Yeah.
I would rather have, I did the work today. I'm paying my people today. I'm paying my rent today, my telephone, I'm paying all of that today. I need the money in the door today. So that's not always feasible, but because I don't think zero ever happens. But I mean, if you required retainers for every single case you're working on, that could happen, but definitely, lock up. I like that, that metric.
Yeah.
And then, other than that, I mean, I'm looking at things like, I talk frequently about, I look at revenue as a pie. So we have a pie and we want to break it apart into like, so a dollar comes in, how are we going to spend that dollar? So of your revenue, I want to see 30% that's being allocated towards paying overhead, not people. I probably should have started with people first. So people, I want to see your people costs. So however much it costs, you have people working for you, 30 to 50% of that pie should be paying your people. And so for me, that's your wages, your benefits, the payroll taxes, whatever it takes to have those people, to be able to pay those people to work, to keep them coming to their desk every day, 30 to 50% of the revenue. And then 30% to the operating, right? To your operating expenses, your rent, your malpractice insurance, your library cost, your software. Okay. 30% of that, which leaves 20 to 30% available to you as an owner for profit. And yes, you should be making more because
Sure.
you need to be enjoying a profit. And that's where I think a lot of people miss the boat. I think a lot of people I talk to, and I am so guilty of this, always putting myself in the shoes of my client. Would my client pay for this? Or would I pay somebody to do this? I mean, my first tax return I did for a client when I went on my own, I'm like, I'm going to bill you $100. Is that okay? And it was a friend of mine. She's like, honestly, I'd pay you 3 or 4 times that. And I'm like, no, 100's okay. Really? 100's okay. And I felt guilty. But then I'm thinking, well, wait a minute. I wouldn't pay somebody $100 because I know how to do it. I have the right tools. I can do it. The other person has no idea. That's why they're paying me. I'm the expert. I deserve to be paid. And so I'm definitely a big supporter. You have value and you need to be paid, especially the firm owners who are taking on the risk of starting a business. You start a
Yes.
law firm, that is a huge risk and you need compensated for that. And just
For
think
sure.
about if you ever worked for another employer, whether that was in law or not, you probably had a 401k plan. So you had somebody else paying your payroll taxes. You had somebody else helping you fund your retirement account. They may have given you a gym membership. Like there were other things, like there were
Right.
things, right?
Yeah.
Now, even if simple as snacks in the break room, like somebody else paid for that if you worked for somebody else. But now that's all coming out of your pocket, but you deserve to have a profit at the end of the day. You deserve to be rewarded for the risk you're taking with your firm.
Couldn't agree more. So before we move on, I just want to make sure I got the North Star metrics. I'm going to hold you
Mhm.
to this, Kelley, right? So
Okay.
we had,
Okay.
okay, so let's go through it again. So number one, I already forgot because we've been talking so long, right? Do you
So
remember what
cash
number one?
balance, What our
cash
cash
balance,
is.
cash on
Yep.
hand, cash
Yep. Cash
balance.
on hand. Figure
Then
that
number
out.
2 is the WIP, right? Work in progress and the lockup.
Our lockup. Exactly. Our lockup.
Yep.
It's the
Okay.
WIP plus how long does it take you to collect your receivable, your accounts
Okay. So how
receivable.
long does it take to get your uh number 1, right?
Hmm.
Again, is making sure how much money you have on hand. Number 2 is how long does it take you to collect money that you're owed. And then number 3 sounds like looking at the percentages and what your profit margin looks like.
Absolutely. Yeah. How are you spending? A dollar comes in and how are you spending it?
Okay. Makes sense. I think those are 3 great metrics. I know it's difficult for you because every situation's unique, but just
Right.
curious, like what's a good starting point? What would
Yeah.
a potential blueprint look like for someone listening, you know? So I think those are
Absolutely.
3 great metrics to look at. Um, so let's talk about here, kind of as we're coming towards the end, about long-term freedom, right? So kind of looking at making something that's a little bit more sustainable, right? You, like you've mentioned, you've taken the risk, you've built a business, right? You have this awesome thing. How do you make sure that you're not feeling the stress, that you're feeling more of the freedom side of things, that you're building a firm that isn't just keeping you busy, but it's actually rewarding the people who built it, which is you as the owner, right? So just curious for you, what does that end game look like for a firm owner who wants to scale in a sustainable fashion?
Yeah. So I will ask clients, why did you start your firm? And some of them will say, I got fired, or I just hated for me, I hated where I worked. I worked at a bank and I was miserable. I worked long hours, low pay, no appreciation.
Yeah.
I didn't see an end in sight. Like I just felt like it was going to continue going in this direction. And so for me, it was about time. I needed my own time. So at the time when I started my firm, I was single and childless. I rode a motorcycle. And my motivating factor
Nice.
was that
Love that.
I had a bike night to go to every night of the week, and I couldn't go to like half of them and I had different groups of friends at every night, went to someplace different. And I was getting frustrated. I'm like, oh my gosh, I'm in my early 30s and I can't ever go see my friends. This is crazy. So I'm going to quit. And my parents freaked. They were like, what? You don't have a job? You don't have health insurance? How are you going to make your mortgage payment? I'm like, I don't care. It'll work out. And it did. But for me, it was about the freedom, right? I
Right. You
wanted
got to take
freedom.
risks
So it was
sometimes.
about
Yeah.
time.
Yeah.
And so I was okay working 7 days a week. If I worked 4 to 5 hours a day, I was okay with that. But
Yeah.
I needed my afternoons to go do my thing. So I will ask clients, okay, what is your goal with why you started your firm? And is that still your goal? Because then after I started my firm, I ended up getting married, had kids. Now my whole world changed because I have a different focus. Now it's not about getting out at 3 o'clock in the afternoon to go do things. Now it's, getting work done so I can get home to see my kids. So it's similar, but different. But I would want to make sure that whatever your goal is, and I have clients that will tell me, I'm not going to lie, I want to be a millionaire. Great. If that's what you want, then let's figure out how we do that. So let's making sure that we have processes documented in your firm, even if it's today just you. Because if you want to get freedom of time or money, whatever that looks like for you, you're going to have to hire people at some point. Now, I'm not saying we're going to document how a lawyer should lawyer, but I want to be able to say intake. When a call comes in, how do we answer the phone? How do you want it to be answered? Because it makes a
Yeah.
difference. And,
100%.
and I'm not one, because I'm sure you get frustrated. You call some, help desk or, the IRS or whatever, the bank, whoever, and they're reading scripts. My health insurance. Oh, I can't even call anymore because anytime I call, it's always a script. You can hear like click, click,
Yeah.
click on the keyboard and they're pulling up the script to answer my question. I can only go through chat at this point with them. So I'm not suggesting that documenting how things get done is a very strict, but you at least need to have something in place so that somebody else can provide the quality of customer service that you want, what you expect, and go through and document. So, standard operating procedures, SOPs, they can be as detailed or as not detailed as you want. But I suggest putting in bumper rails, put in some guards to say, hey, you can offer this to a client, but never offer that. So, to the best you can. And these are a work in process. You're never going to have a definitive, this is it written in stone. It's always going to change, but you
Yeah.
need to have things in writing so that your team knows, and then they're not coming to you for every single question. What does the SOP say? What is our training? Because that turns into your training manual. So now when you hire somebody new, somebody leaves, it's inevitable, things happen for whatever reason. It could be that they could have loved this job, but their spouse just got, relocated with their job across the country, and you can't do whatever their position is. It has to be in person, right? So things happen that are completely beyond your control. But if you have some stuff documented on what your expectations are, how you want things to work, and then, staff have guidelines now of how they can work without you, that gets you to a point where you can start taking a step back. And now you just freed up time because you're not constantly micromanaging people. They have some, limits on what they can and can't do without you. And then now what do you want to do with that time? If I just freed up some of your time, are you leaving work early? Because maybe that was your goal. Then I'm excited
Mhm.
for you. And maybe it's that now you have more time to do billable work for clients. So now I'm increasing your revenue.
Yep.
So it's a whole bunch of things that kind of work in the same direction, but making sure that we're getting to what your goal is. What do you want? That's what we're going to try to help you figure out that path to make that happen.
Love that. So really, understanding why you started your own firm and then putting out that end goal, right? What does the top of the mountain look like? Then how do we ascend up there, right? And figuring out all those steps. And I think what you said, the starting point is so true because a lot of people overlook creating SOPs, operating procedures. Hey, I'm doing everything myself. Why do I need to document
Right.
this, right? Because you can never let go. You can never
Right.
bring on someone else. You're never going to have any free time if you don't document it for someone else to do it. So I love that. I think that's a fantastic tip, Kelley. Thank you.
Sure.
So
Absolutely.
yeah. Now, so before we wrap up, there's a framework based on your expertise, Kelley, for any attorney looking to turn their revenue into actual wealth. And I think that's a fantastic goal. So I'll just read off each of the five, and then you just add on some color commentary if that works, Kelley. Awesome. Let's get into it. So number one on the checklist, 5 steps to plugging those leaks is number one, audit your vampire subscriptions.
Oh my gosh. So this one's crazy. I actually I am so guilty of this. And I know you know what I'm talking about. You do the free trial, but you had to do the free trial, you had to enter your credit card information.
Yep, yep.
And then before you know it, you're like, "Oh, I've been paying for this for 3 months. I did 2 days in that, 14-day trial and decided it wasn't what I wanted, completely forgot." So those are the vampire things. Though, so it's going through, I actually look once a month at my expenses, and I look at all my expenses, and you ask yourself a couple questions. Do you still use it? If you do, great. I'm excited for you. Are you on the right level? You know how these days everything has 3? You can pick
Yeah,
3
yeah, great
levels.
point.
Are you on
Yes.
the right level? Okay.
Yep.
And, obviously if you're not using it, you're done. Deep 6, we're done. Trash that, get, whatever you have to do to cancel it. If you're on the high tier and you're like, I don't even use, because you can go to the tiers and you see everything included in the first tier plus, and then
Right.
these, look
Yes.
and see, are you using it? If you're not, downgrade. There's no shame in downgrading. If it's doing what you need it to do, but you're paying
Right.
extra and not using those features, then downgrade to the correct, like right size. And that's going to save you money. So absolutely, the vampire subscriptions are horrible. And I've seen so many firms. My goal when I do this, I'll do a total, and not even just expenses, or not just subscriptions, but total expenses for a whole 12 months. And my goal is to find 10% in waste. So if you're $100,000 firm, that's 10 grand. Okay. Multiply that a million, 100 grand, that it's a lot. And the first time I do it, I usually can get close to 10%. I've definitely had firms I've gone over 10%, but it's worth it. It's crazy how little things add up.
I love it. And I like the little bonus tip there. Don't just look what you need or don't need, but also look at the tiers, right? Do you need the tier that you're paying for? I think that's a fantastic tip, Kelley. Let's get into number two, which is move beyond the P&L, which you already talked about a little bit here.
Yeah, I mean, definitely look more at your statement of cash flow. And if you're on QuickBooks or if you have, Clio accounting, My Case accounting, it's a standard financial statement. There's actually three financial statements that's the basis of financial reporting. P&L is the one, balance sheet, and statement of cash flows. And if you can move into start looking at your statement of cash flows, that really tells you where your money's going, because the stuff you don't see on your P&L are your debt payments, your owner draws, and buying fixed assets. And so oftentimes if you don't see it on your P&L, you completely forget that that's even there. The statement of cash flow, it points it out right there. Red flag. You had, 50,000 in distributions, 10 grand in fixed assets. And you're like,
Right.
oh, I did, didn't I? That's why the whole statement of cash flow is to say cash at the beginning of the period equal, and then how much, cash increase or decrease for that time period and where it went. So I'd start looking at your statement of cash flow.
That makes so much sense. I hope people take that to heart. I can't
Me too.
emphasize that enough.
Me
Number
too.
3, verify your timekeeping.
Yeah, so if you're on any system, and even if you don't have a case management system that does time tracking, which these days I don't know of any that don't have timekeeping somewhere native within the system, there's other tools that you can add on to your like if you're on Google Chrome, there's extensions that do timers. If you build time, absolutely you need to make sure that you're capturing all the time so that you can get it billed correctly. And I would even argue if you are billing flat fees, that you also want to be tracking time. And now I'm not as religious about tracking time literally every minute of every day all the time. But if you do flat fees, make sure you're even pricing those profitable. And the big chunk of it is your time. So if you have if you do trademarks and you're like, oh yeah, 2 grand, I'll do a trademark, but it's taking you 50 hours to get, that's not a good, that's not a good hourly rate. So you have to increase or figure out how to make it faster. So, time tracking, making sure you're capturing all your time.
Couldn't agree more. Time tracking is key. Like you said, even if you're doing flat fee in projects, understanding are you charging enough or not, that can be a real game changer. So couldn't agree more. Let's get into number 4, separate owner pay from profit. And I think this is a big one.
This is huge. So often I will talk to somebody and I'm like, so how much did you make from your firm last year? Oh, well, my P&L said, 25,000 or 100,000. It doesn't matter what the number is. And I'll say, are you happy with that? And uh, there's always mixed reaction to that too. But I will say, but I'm going to argue and say that if you're an LLC or a partnership, what were your draws? Because your profit isn't actually what you took home. I'm sure of it. I can just guarantee it. And if you're an S corp, you would have had the draws plus your W-2 paycheck. So you need to make sure you're looking at the right numbers. But I want to make sure, and this is the idea I usually leave people with. If you went on sabbatical today for 6 months, a year, okay, we're not talking a week. You're not going on vacation for a week, but you're going out, you're going to be out long term. Okay. You have to hire somebody to do your job while you're gone. Don't debate can they do it? Can I do it as good as me? Because nobody can do it as good as I can. Forget about that part. But you need somebody in your seat while you're gone. How much would you pay that person? That's how much your firm needs to be paying you. And as an owner, you need to get a profit on top of that because you took the risk to start the firm and continue the firm. So you should be being paid for doing your job as an employee, and you have a profit that you should be able to get a draw from as well.
Makes a lot of sense, and kind of keeping those separate, I think is really important. Like you pointed out. Let's move on to number 5. Last but not least, this is an interesting one for me as a marketer, right? Set a
Right?
marketing ROI threshold.
Somebody will call me and say, "Hey, so I'm looking at my marketing dollars and I'm excited that revenue's gone up." And I'll say, "Okay, I'm excited too, but let's talk about this." And I actually had this happen. So I started this conversation with somebody, a client of mine, probably about 2 years ago. I said, "Hey, your ad spend went up. Can we talk about that?" Oh yeah, oh my gosh, this is great. I brought this company in. They specialize in law firms. They promised my phone to ring off the hook, and wouldn't you know, within a week, my phone's ringing off the hook. It is amazing. I had to hire a virtual receptionist to do the initial answering the phone. They know what to send to me. This is great. And in this situation, I said, I'm excited for you. However, that happened a couple of months ago, and I still don't see an increase in revenue. And then I got this, and it's a virtual call. So I get this, hmm, that's a good point. And I knew that this was actually a situation where they're not in personal injury. So I'm like, I feel like you should have at least started seeing some revenue coming in pretty quick on this. At least not in the first 30 days, but probably like the first 45 days. And then I should start seeing revenue go up. And then there was the confession. Oh, well, probably half the calls that come in are not for my practice area. I'm like, oh, but so excited that the marketing company promised the phone would ring. And I'm like, but that's the wrong thing that we were going to judge. We don't care that the phone's ringing. They need to be qualified leads. So let's make sure that the calls coming in are ideal clients to start with, or very close to being ideal clients. So it ended up, what we did to salvage this piece was we said, okay, well, if your marketing people have something dialed in that's ringing your phone off the hook, do you have other people in your area, other law firms you can refer this work out to and get a referral fee? So that was initial, like, we could offset some of the marketing spend by collecting referral fees. But then it was, now we need to work on changing the messaging, because what is driving the phone calls, and because that's not driving the right people. Okay. And so it took a while to figure that out, but I want to make sure that just because you're spending $1, I want to make sure that you're actually getting at least $2 or more back. So if you're spending $1, we got to have revenue coming in, and it's got to be real revenue, not, because the happy medium, like the compromise was getting the referral fees. At least it wasn't completely wasted spend, but then let's shift that into, let's really spend on getting your ideal clients to call you, and what do we need to make that happen? So yeah, it's not all marketing dollars are equal, unfortunately.
100%, and so I couldn't agree more. Like, referrals can be a pain in the rear end, right? Because then you got to track them
Absolutely.
down. You got to make sure you're
Yes.
getting paid for that. So I'm glad you
Yes.
were able to help them with that. And just, speaking myself with, quite a few years experience kind of marketing and law firm marketing, is if your marketing company isn't asking you for feedback and isn't closing the feedback loop, if the leads are actually closing and how much they're closing for, and if these are good leads or not, then you might want to revisit your relationship with your marketing. So I'm so glad you brought that up, Kelley, because I couldn't agree more. And I think a marketing company should be held accountable by signed cases and by revenue generated, not just by the phone ringing, so
Agreed. And I get
apple
it from
line there.
and I'm not the marketing person, but I get it, like the reservations, I guess, from the marketing side is, I generated the lead, but I'm not doing your closing. So how do I have to trust that you have the right people doing the
Yeah.
closing conversations, and
Yeah.
that you have adequate billable rates. Like, I get that, but it's a partnership. Like, at some point you have to figure out how does that all work? And maybe you do have to improve your intake. Like, maybe you have to raise your
Yeah,
billable
for
rates.
sure.
Maybe you have
Yeah,
to fix your billing. Maybe you're not billing fast enough and not doing good with collections. So that's where it's hard. But you're right. It's not. So I get it. I get, and I know I struggle with, I can't make certain promises. I mean, I'm a CPA, so I'm bound by certain, things that I can't promise. I get it, but it is a partnership, and you have to figure out what broke to figure out how to fix it. So
100%, 100%.
yeah,
And that comes back to kind of where we were earlier. It's all about the metrics and the data and making sure that you're tracking everything, right?
absolutely.
I couldn't agree more. Awesome. Well, we're coming to the close here, Kelley. This was such a great episode. And I just want to say thank you for sharing all the great insights. Such a fun conversation. Definitely want to have you back in the future. I think there's so much more that we can talk about and give insights on. I love having on experts, right, like you. It's easy to get caught up in more is better mentality, But I think you really helped and reminded us that smarter is what actually pays the bills, right? Kind of being smart, working smarter there. But before we wrap for today, can you share where our listeners, our viewers can find your book, Plugging the Leaks, how they can connect with you with Profit, Scale, Thrive?
Absolutely. So, best place to connect with me on social media is LinkedIn, and it's Kelley with an EY. My parents were crazy in the 70s. That's as crazy as we got, adding EY to the end of my name. My last name's Brubaker, so Kelley Brubaker, and I'm pretty sure I'm the only CPA on LinkedIn. There's other Kelley Brubakers, but they're not CPAs. I have 2 books actually, and they're both on Amazon if you want to buy them paperback, or you can get a PDF copy on my website for free. And my website is profitscalethrive.com.
Very cool. Kelley, thank you for sharing that. We'll put that in the show notes as well so that listeners can find it there. And if you're ready to scale smarter, not harder, book your free discovery session through our Motion for Marketing Success system. Link is in the show notes. And as Kelley said, you want to make sure that we're actually tying marketing to our revenues. So we challenge you to reach out to us and test us out because that's what we actually do here at Digital Neighbor. And if you enjoyed today's episode, share it with a colleague and leave us a review. Until next time, stay curious, stay grounded, and keep building a law practice you genuinely love. Cheers, everyone. Thank you, Kelley.
Thanks, Eric.